Yeah, Wednesday. What's up, everybody? Wednesday morning. Welcome to today's edition of the Daily Market Commentary. Hope everybody's having a great week so far. We're going to do today what we do every day, looking at our best trades from an educational perspective in our four major markets, S&P, Nasdaq, crude oil, and gold. And then we're going to talk about our stock of the day. So let's go ahead and get started with the big picture. So in the big picture, we're taking a look at another kind of bullish day, but it's a bullish day with a bit of meh built in. We're just seeing a lot of sideways price action here recently. We did have a little bit of a breakout trade in the S&P. Actually, we had a little bit of a reversal right in here, followed by the breakout, and the breakout just didn't go anywhere. Following our 6-candle rule, you see that it went basically nowhere. Our reversal basically went nowhere. We've traded to the bottom of that area. I mean, I still think there's an opportunity for a breakout. There's always an opportunity for a breakout when you're sitting at an all-time high. But we are very, very much just kind of hanging out, waiting on some big earnings. We talked about that on Monday, right? Apple, Amazon, Microsoft, Tesla, Google, Facebook, all announcing earnings this week. Some of them have already done so. I think it was Microsoft and Tesla have already announced. But as those earnings come out, we could see a bit more movement. But for right now, we're just kind of sitting along sideways. And so I just say don't force it. Wait for price to come into quality levels, both in the S&P as well as the Nasdaq. In the Nasdaq, we had a little confirmation short as a potential, but the market blew right through that confirmation short, giving us no entry. Still a nice breakout above this 14,050 area. So if price does make it up to there, I think you have a decent breakout potential. And then from a reversal standpoint, we very well might get an opportunity here at this little 15-minute level. So if you're so inclined, there is a little 15-minute level there that might work for a short 2-to-1. But be cautious of that because, once again, our trend is just not really strong to the upside, but it's not strong to the upside, but it's really not strong to the downside. It's just kind of gone sideways. Right? And anytime you're in a sideways price action, you can certainly trade either direction, but your probabilities are going to be a bit lower. Crude oil, we see that crude oil has rallied up pretty hard. We did have a little reversal area here. We did get a decent little move away from there, about a 2-to-1. But then about 6 candles later, it didn't do a whole heck of a lot. We came back in and gave a touch to this wick over wick level in here. And once again, after about 6 candles, it hadn't done a whole heck of a lot. So at this point, we're going to remove that area and that level. 4-hour chart, we're seeing a little bit of strength being built here, a little bit of winner chicken dinner with a W pattern down here, a double bottom, if you will. And with that double bottom, oftentimes you will see a bit of a measured move in a double bottom, and the measured move is usually from the peak of the W in the middle to the bottom. And so if I duplicate that drawing, move this up here, that would mean that we've got a price target on our double bottom of right about here. Well, that puts us at almost exactly, let me remove these trend lines now. If I take that measured move off of the double bottom, it puts us at almost exactly right here. I cannot grab the right drawing tool today. There we go. Puts us almost exactly right here for a potential reversal. Now, understand that if you take that level, that there is going to be a bit more risk inherent there because it is going against our 4-hour bigger picture, but that is the kind of measured move of this double bottom. Now, it's kind of a sloppy double bottom. I will say that. But it does still indeed exist. So if you want to try to take that for a day trade, let's move that down to the hourly chart. Looking at the hourly chart, that might be a bit wide, especially with the basing we have right here. However, if you want to be a bit more aggressive, which I'm okay with in this instance because it's such a small level, you can take this area here, this wick over wick area right here, and then the absolute tightest your stop can be in that instance is going to be the leg-in candle on the 15-minute chart, which puts us right about 64.25. So that would be our absolute tightest that the stop could be on that smaller time frame. Okay, so Now, ultimately, though, if we start basing up here, you've got a breakout candidate as well. So just I wouldn't fall in love with that short. I think that short is there, but don't fall in love with it. I'd rather see a bit of a breakout. If we get above here, in my mind, almost none of these levels are going to be good enough to stop us. And then gold. Gold is sitting right above our potential breakout line. This is a fair price value area, prior area of resistance, new area of support. We're sitting, nicely up above that level. We did have a little breakdown area last night right through here. It's not formed at a great time of day at all, but it is still valid on a retested area. So that would be my level in gold. Now speaking of gold, let's talk about our stock of the day. So speaking of gold, our stock of the day, we're going to talk today about Goldman Sachs. So Goldman Sachs, a little bit of a base that we have formed here, a nice rounded base. And oftentimes these nice rounded bases are going to be areas of accumulation where there's been accumulation that's happening. Those of you that regularly have gone to our tactical reinforcements class know that we talk about the CCI 100, and this is actually setting up for a very nice CCI 100 breakout, as well as pricing coming to that new high. So we are setting up here on our CCI 100 breakout, as well as break into a new all-time high. So there's a couple of ways that this can be played. First of all, you could theoretically just take a breakout above yesterday's high, provided that we get a bit of basing. Looks today like we're going to open up somewhere in between, right around where we closed. If you want to be a bit safer, then you can wait till we get a brand new high. I'm okay getting in a bit earlier in this instance. Your stop is going to go below this most recent pivot. Now, if you want to go a bit more conservative, then wait for price to come back into this 340 by 338 and get long on the pullback into this region of the hourly chart. Little bonus stock today in doing that same search, I found CarMax as a bit of a bonus stock for today. As CarMax also coming up to an area where we could very possibly see a bit of a breakout. It's had a pretty decent move up. And then when I look at my CCI 100, it's close to that crossover point. And that's a really nice indicator when it's combined with price action. Once again, tactical reinforcements. That's how we utilize any indicator is as a tactical reinforcement to what it is we do. But until tomorrow, everybody, hope you guys have an absolutely great day, and I will talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.